you will like Tesla better at 200 than you would at 350. Absolutely. That's a statement Gary made. Absolutely true. But what's the difference between his approach and ours? Again, I keep saying I don't see I don't see anything wrong with what I'm saying, and I don't, but he was attacking that's wrong. You need to be looking at valuation. And I'm like, okay, well, I am looking at valuation. I am very happy with the price falling, and I think that's great. But what's your valuation if you said earlier, right? If you would look at 10-year cash flow, you discount it, you do believe in Robotaxi, you believe in Optimus. So what is a fair value, potentially fair value around today of the present value of the company?
Well, my fair value is roughly 850 in December this year. Yeah. So I would have to look at the latest model update, but it should be probably at 600 something right now. That's what I believe is the true value. So we get a massive 50% discount right now, but on a totally tactical trading level. Of course, if I think there is a 50% chance we go significantly lower, which I think there is because of the market, then I'm going to wait not to be fully in Tesla. I am fully in Tesla, but you can always drag some more dry powder from somewhere. So I'm just in these opportunities. I mean, you know how it is, right? I mean, if Tesla goes to 250 and then goes up to 300 again, you're making what, 20%. Yeah. But if you play this right with calls, you're making like 300%. So that's, that's these opportunities I'm waiting for to have more leverage. But I think the difference to Gary is that Gary fundamentally thinks that the stock is worth 200 and not more. Whereas I believe it's worth something like 680 right now. So of course, I'd rather buy a 680 stock at 200 than 338, but I still buy it at 338 because it's a massive discount. And I'd rather have it now, even if it drops short term, because I know where it belongs.
There you go. There you go. So that's not about whether or not you don't do valuation of the stock. It's whether or not, what is your valuation?
Hey, if you want to stay ahead of capital markets and the next Tesla moves, join us in Pioneerlands. Here we track Tesla, capital opportunities, AGI disruption, and politics. It's your critical information advantage in the age of AGI. It's free, and the link is in the description. Let's get back to the video.
And people who look at the stock as a car company will say, "Hey, when I compare it to Tesla, to Toyota and GM, it's right. The market cap of Tesla is larger than the top 12 auto companies in the world. How's that possible? Because the market does not look at them as an auto company, but you do. So if when you're asking that question, you're going, it should be the same multiple as GM is and Toyota. Okay.
And I have to repeat this thing because most people actually don't really know that, including Gary, it seems, that when you invest, you're basically buying a company, as Warren Buffett says, you buy the company. Think of buying the whole company, only that you buy a pro rata share. And what you buy is the future cash flows. If you put $1 million to buy an entire company, you want to make $1 million plus interest over the next 10 years that it generates. The cow generates the milk. You put 1 million into the cow, you want 1 million of milk plus interest coming in. And so everything boils down when you invest to take the next 10 years and do your own research to create your own model, or take mine and adjust it. And then you will see the numbers. And I have a discounted cash flow model, so you see what the discounted value is, discounted by an interest rate, you assume. And that is the decision-making point for all investors. What all investors should do. And if Gary says it's 200, whatever, the current discounted cash flow, then his model should show that. It should show, okay, there's no Robotaxi coming, or only minute in the next 10 years, no Optimus, or only minute. So when you discount it down, there's nothing left. And that's what he should do, but he doesn't. He does not have that model, in my opinion, and he does.
No, he doesn't. He doesn't. I've asked him this question in the past. First of all, that's why you should do your own. As a retail investor, you should do your own analysis of what you think the probabilities are, how big the market would be, what would Tesla get in margins, revenue, sales, and then you can put a risk-adjusted, say, I don't agree. And this would be optimistic, but let's put a 50% chance that they'll even get 10% of the robot market or the robotaxi. When you do that, it's still worth more than what it is today when you discount. Yes. What Gary, and I asked them, with these portfolio managers and analysts, when you dig deeper, they say, I believe in robotaxi, I believe in Optimus, but they have very small numbers. Why? Because they have to keep their price target to within basically $50 of what it is today, plus or minus 50 of what it is today, or 100 maximum. What is it, 350 right now? And the biggest price target we have is 500 from Dan Ives. Everyone else is 400. Gary says 320. So, but no, the reason why I asked him, wait, do you believe in optimists? Well, so first of all, he doesn't believe in it. He doesn't think it's going to happen. And then he goes, if it happens, there's a maximum of 1 million human or robots in the market, total addressable market. So then we asked him, well, where did you get that 1 million? He said that 1 million is what it is today for industrial robots. And like, we're like going, what? That's how he thinks of things. He goes, okay, there's only 1 million industrial robot market out there. So therefore, I think that there will only be 1 million human or robots. And if that's the case, it really won't make a move. Okay. So that's the way he's thinking. So that's fair.
But this is like
this analysis, but
thinking. I mean, this is exactly the problem, that when you talk to institutional investors or institutional analysts, a lot of retail investors think, oh, they're so fancy and they're so smart. No, they're not fancy and they're not smart, because they're the same as government employees who tell you unemployment numbers. You know how you get to your unemployment number? You go to the president and ask him, what's my range? That's how you start the analysis. And Trump says, well, you need to stay between this and this. Whatever it is, it needs to come in here. And if you don't hit the range, you get fired, as we just saw, right? So he just fired the person who was in charge of the unemployment numbers because he didn't like it. The same is true for analysts, exactly what you said. They look at the stock price and they understand what's the range, the reasonable range of acceptability in my peers. Oh, it's plus minus 50. If I say anything outside plus minus 50, I get bashed on CNBC. Or by my boss. So people have to understand, these are not first principle thinkers. These are careerists and they're politicians, also Gary Black, and they can't do something logical or first principle based. That's why you have to listen to Herbert or Joe or Chris Camillo. You have to listen to people who are free to do their own investments and own thinking, and then you have to compare the arguments. And you can easily corner Gary Black, is exactly how you said, and then he has to come up with very stupid assumptions. Like, what do you mean industrial robots? First of all, they don't even compete with industrial robots. It's the wrong market. Yeah, it's a totally new market. It's weird. And it's a 10 billion, not 1 million. That's you're off by how many magnitudes? Like 5. I don't know.
Ridiculous. Yeah. So first of all, I don't like to we're not giving financial advice. Every person has a very different financial situation and they can choose whichever model that they want. You should listen to multiple people. Each of us have different approaches. And my point today is not that one person's wrong or right. It's just he's telling me I'm wrong. Right. He's telling me I'm wrong. So I'm trying to explain what I think he's thinking and what I'm thinking, or what we're thinking. So that's what we did today. So I appreciate that very much, Joe.
And it just this is my last words for today, but I just encourage everyone, because that's Pioneerlands. It's also our mission at Pioneerlands, to empower people to seize control of their own money. And you have your own brain. You can have your own thoughts. Just listen to Herbert or me and Gary and just compare what people say and compare the discussions. You can make up your own mind by listening to the arguments. Don't believe that there's anyone out there who has like the magic authority to tell you what to do. No banker, no analyst, no Joe, no Herbert. You make up your own mind and you listen to the arguments. And if you don't understand something, I mean, we are here to always try to help explain the financial modeling, but you make your own call in the end.